Okay, hello there, traders. Hello and welcome to Admiral Markets Market Pulse Weekly Update number 33 for the 2nd of July 2025. I hope you're all well. I hope that you have had a good start to this next quarter, calendar Q3 of 2025. We're already into the second half of the year already. And I hope that you are ready and engaged and ready for what I have said all along will probably be a very eventful second half of 2025. As always, I hope that you can hear me. I hope that you can see me. I hope that you can see the slides as we go through our session this evening. As always, we'll start with a quick risk disclaimer. You can take a moment to make yourself aware of the risk disclaimer. Just always remembering that trading on margin does involve risk, and that ultimately you are responsible for your own trading and investing decisions. So, what do we look to cover on the Market Pulse weekly update? Well, we appreciate here at Admiral Markets that we live in rather interesting and eventful times. And certainly for those of you who are at the start of your trading and investing journey, it makes it rather overwhelming and intimidating to be able to try and make sense of these eventful and volatile markets. So our sessions here are to help you understand and analyze global financial markets. Most importantly, we'll look at how investors and traders can turn their analysis to their advantage, and we'll also share insight on how you can trade and invest with Admiral Markets. So there is always plenty for us to cover. There is always plenty for us to talk about. If you have questions or comments, or you'd like us to look at something in particular, well, you can always put that in the chat box here. Or if you're watching this later on demand, okay, just put that in either comments or drop us a note, and we'll happily take that on board. For those of you who don't know me, my name's Paul. Traded and invested for many, many years. Traded for funds, traded for clients. Primarily in my trading pathway, I like to focus on trading FX, indices, and commodities, where I'm a trend trader for sort of swing and longer term position trades, and a mean reversion and reversal trader for shorter term intraday trading. And as an investor, I tend to be much more sector focused and much more intuitive in terms of how I interpret my rules. So, plenty of experience that I can bring to this evening's session, and as always, I'll happily share global financial market and how you can turn that analysis to your advantage. I realise that some of you are at the start of your trading and investing journey, and also at the start of your journey with Admiral Markets. So to help you understand and how they can help you, Admiral are a global financial brokerage that provides you with a wide range of financial instruments and various asset classes, and also provide a comprehensive education suite, regardless of whether you are a trader or investor. As I said, we provide a comprehensive education suite, including regular webinars with market experts, providing live market analysis like the session here. You also have access to premium analytics portal and the research terminal as clients of Admiral Markets. And there is a huge swathe of educational content on both the Admiral Markets website and the Admiral Markets YouTube channel. So please feel free to make yourself available of that. For those of you who are focused more on the trading pathway, Admiral Markets provide access to over 4,000 available instruments as FX and CFDs on commodities, indices, and stocks, providing a sophisticated trading environment with standard leverage for retail clients, providing MetaTrader 4 and MetaTrader 5 are available to engage with markets. And you also have access to the Admiral Markets mobile app for those of you who like to trade on the go. For those of you more focused on the investing pathway, Admiral Markets provide access to over 4,000 available stocks and ETFs, giving the option for fractional investing with fractional shares and fractional ETFs, providing the opportunity to auto-invest in the mobile app, and providing the opportunity to engage with markets using either their download MT5 platform, a web trader version, or the Admiral Markets mobile app itself. So, as we said earlier, we appreciate that 2025 has been a rather interesting and rather eventful and rather volatile time, both in life, geopolitical events, and markets. And we appreciate that, for those of you at the start of your journey, it might be a little bit overwhelming, a little bit intimidating, trying to make sense of these great developments and trying to understand how to put them into some form of market context. Hence why for our weekly webinar sessions, we look to focus on how to navigate through the global markets and filter information that comes our way. So every week we take a look at the major news themes and narratives that are affecting the markets this week. So from here, Wednesday, 2nd of July through to next Wednesday, 9th of July, providing analysis of the major global markets. Always happy to have a discussion about trading and investing, and also showing you the technological solutions available to you as a client of Admiral Markets, with the idea being to help educate and provide insight on markets and the way that traders and investors can engage with them. So, as I said, we will start with a look at the major sort of themes and narratives that we expect to sort of show or are prevalent in markets at the moment. I appreciate, if you're at the start of your journey, that there is a huge swathe of information and content that is available in the markets, even when just even looking at the sort of the news and the narratives that we find ourselves with. And so, what we hope to do with this particular sort of session here is just help you focus on which are the really sort of main elements that you should be aware of and you should keep on top of in order to help give you some insight into markets and also be able to manage risk, regardless of whether you are a trader or a longer term investor. Certainly what we've had here this afternoon is that we had the US ADP non-farm employment change numbers. What we do have, of course, first week of the month is the non-farm employment numbers, which we'll come to in a moment. But the ADP non-farm employment numbers, they tend to come out a couple of days beforehand. ADP is a private payment processing firm. So what they're doing is giving insight into jobs within the private sector. So that means that sometimes the numbers can be a little bit volatile, and certainly this afternoon's number was somewhat volatile to the downside. But what it does sometimes also give you is a little bit of an insight or a heads up about the sort of direction of travel that we might see in the non-farm employment numbers themselves. Now, normally we would, of course, see those non-farm employment numbers on Friday afternoon at around 1:30 UK time. But of course, remember, this Friday is the 4th of July American bank holiday. So what we're actually seeing is we will be seeing the non-farm numbers tomorrow, Thursday, 3rd of July. Okay, so make sure that you're aware of that. Make sure that that is in your economic calendar for the day tomorrow, so that you're not sideswiped or surprised by that risk event. So we have Swiss franc inflation numbers in the morning. And then I said in the afternoon, we have the average hourly earnings, the non-farm employment number, the unemployment rate, and then also for the US, their ISM services PMI. So it had the manufacturing PMI out earlier this week, and it was pretty much on par with what was expecting, but people will be keenly interested in the services number as well as the non-farm employment numbers, but also the services number, to be able to take almost like a snapshot of the state and health of the US economy. Unusually for ourselves and for central bankers, we actually have Mr. Bailey, the Governor of the Bank of England. He'll be speaking on Saturday. Monday is a quiet day in terms of major formal economic news. On Tuesday night, going into what will be sort of Tuesday night into the morning there for ourselves here in the UK, we have the Royal Bank of Australia. They have their cash rate, their interest rate announcement, and then 24 hours later, we have the same for the Royal Bank of New Zealand. And then probably the major news of next week will be Wednesday evening on at the same time as we are here next week, where we'll have the minutes from the recent FOMC meeting. So it's kind of an interesting, let's say, week ahead. It's a little bit shorter than expected because of that Friday, 4th of July bank holiday and days off, and also a little bit thinner in terms of the news, but undoubtedly, okay, these will have the opportunity to have an impact on markets. So, as I say every week, okay, it is important to understand and know when these major pieces of data are coming out. Okay, you can follow it on an economic calendar. There is an economic calendar on the Admiral Markets website and elsewhere, okay, on the internet. So there's no excuse not to know when these major formal economic pieces of data are coming out, because they are likely to induce volatility. And as I say every week, volatility is very much a double-edged sword. Okay, when you're on the right side of it, well, then it can make for a great trading and investing session. When you're on the wrong side of it, it can make for a challenging session. So it is in your best interests to be on top of that as much as you possibly can. Okay, before we look at the charts and see what's going on in the global markets, as always, every week I like to set the expectations. Hopefully, by hearing it every week from me, okay, it sort of sinks in as a baseline of a way of operating. As it says there, risk management is absolutely key. Okay, make sure you understand it and make sure you honour it. If you are at the start of your journey and still trying to understand risk management, then you will find there is plenty of educational content on the Admiral Markets website and the Admiral Markets YouTube channel. So make sure you make yourself aware and available of that. As it says, knows what news is coming out for that week, and we've just taken a look at that. I also recognise that we do live in a world where President Trump's social posts can have a huge impact on markets. So regardless of your own opinions, the reality is that his posts can shift markets, and so it is in your best interest to make sure you're following them just to see what, if any, impact it does have on overall markets. Ideally, for longer term position trading and investing, what I always suggest is conduct your analysis before making decisions. What do I mean by that? Well, I do a lot of my work on the weekly chart. Okay, I do a lot of my analysis on a Saturday morning. I have a couple of hours on a Saturday morning, and the reason I do it then is because markets are closed, so there's no distractions. Markets are closed, so I have the full weekly candle to work from, and so I'm able to do my analysis, make my plan, and then carry that out in the week ahead. And I find that is what works best for myself. Goes without saying that you should have a good internet connection and you want to be rested and prepared before you engage in your session. And just as a point to note, for long-term trading and investing, we are looking to be long-only buyers through the invest.mt5 account here at Admiral Markets. Also, what I'd like to just help new traders, investors, when we switch across to the charts, to be able to understand, how I see these markets, how I view them. My charts are quite simple in their setup: the sort of blue or green bullish candles, red bearish candles, a blue 20-period simple moving average, a red 50-period simple moving average, and a green 200-period simple moving averages, and the sort of little grey triangles, they are fractals. So my charts are relatively simple because that is what I feel is best for me, both as a trader and investor. Less is more, and we'll talk about that more when we look at the charts in a moment. And before we switch across to the charts, I realise that some people will be happy and understand that Admiral Markets what they offer for the trading pathway, but many may not recognize that Admiral Markets also provide investing accounts where you can engage with the UK shares and ETFs that are mentioned in this webinar. And you can do that. You can open an invest.mt5 account, okay, through the dashboard, open the web trading platform or download the MT5, as you'll see that I have here. And then you can use MT5 to engage in UK shares and ETFs as you would normally use MT5 for your trading pathway. Okay, so why don't we switch across to the charts and see what's been going on in the world? There's been sort of interesting developments in the UK today, but we'll look at that more in a moment. So just bear with me for a second, and I will switch across to the charts. Okay, so I'm hoping that you can still see me. I'm hoping that you can hear me, and I'm hoping that you can see the Admiral Markets MT4 platform. So, just to help people, just to reiterate, what I do for myself is that I use MT4 for my trading pathway. Okay, I have plenty of setups and tools that I can work with that. And then I use the Investor MT5 account for longer term position trading and investing. I find that that is what works best for me, to have those almost kind of hard boundaries between them. I appreciate that some people only just want to work on one platform, and that's absolutely fine. That's absolutely your prerogative. I've just found over years that it is almost easier for me to have, as I said, those kind of hard boundaries between when I'm operating as a trader and when I'm operating as a sort of long only investor. Okay, so what have we got here? What are we looking at? Let's just bring up the old drawing tool here. So I have profiles set up in both my MT4 and MT5 platforms. This one is, you can see at the bottom, is an indices one. So what do I got here? Let me just move this around a bit, make it a little bit easier for you to see things. I have the Dow on the weekly, S&P 500 on the weekly, NASDAQ on the weekly, ASX 200, which is the Australian index on the weekly, the HSI 50, which is the Hang Seng, the Hong Kong index on the weekly, JP225, the Japanese Nikkei on the weekly, FTSE 100 UK, and the Germany 40, the DAX here on the weekly. As I say, the reason I want to have them like this is that I can get a very quick sort of snapshot, all right, of what the state of play is. Okay, if there are any particular trends in place. Okay, getting an understanding of whether we are in a risk-on environment or whether we're in a risk-off environment. And hopefully, as you can just see there, just very quickly sort of drawn in a few arrows there to show that, we are most definitely in a risk-on environment when it comes to equity indexes. Okay, and I'm just going to make it clear about equity indexes, because I think when we switch across to look at US dollar, look at sterling, etc., we might get a bit of a different idea and a view. But you can see there that that has been very positive over the last couple of weeks, and in particular, okay, when we look at some of these US indexes, and in particular, let's have a little look at. So, for example, excuse me, this is the S&P 500. If you remember, a couple of weeks ago, we were talking about how, let's get the old tool up here again. How we were effectively just a little bit of a range. Okay, we're a little bit of sort of knocking about sideways after the thrust up, after the sort of Liberation Day, how would you describe it? Shenanigans, the sort of the tirades, the sort of Trump tariff, shifts that we saw. But what we saw last week, which we touched upon in last week's session, was how the world and how global markets have responded to the US decision to attack Iranian nuclear facilities. And actually what we can see is that we actually last week we pushed and closed at new all-time highs in the NASDAQ there, and that is quite something, really. That is really quite something, considering what we've been through. Okay, really through the vast majority of Q2, calendar Q2 for this year, to be able to, there would be many people who, when prices were accelerating down here, would have been a bit surprised to say, well, that actually within a couple of months, we'd actually be at all-time highs. That's quite something, all right? That's quite a maneuver, right, within markets. And those of you who join us regularly, you'll hear me always say that, you know, um, good trends leap off the chart. Okay, if there is a good trend in place and it is clear, well, then your job is to ride it, not to fight it. Okay, very often new traders, new investors, they want to try and fight the sort of the trend. Okay, their ego is driving them towards making poor decisions, which generally tend to lead to poor outcomes. What I always say is that if there is a very clear trend in place, don't try and fight it. You want to try and find a way to be able to get into it and to actually to ride it. And certainly, that, as I said, that's been quite something to see the S&P 500 and the NASDAQ move in those areas. And as we can see here, if I go down to the daily chart here, this candle here, okay, this huge big bullish candle after the real big sell-off, which we talked about, that was back when President Trump sort of, talked in the, he sort of turned up in the Rose Garden, I think, and then announced that there would be a pause on some of the tariffs, okay, a 90-day pause. And what we saw was, basically, bang, that's where we have been. But we are getting towards the end of that. I think it's the 9th of July at the moment. I might have the date I could track, but it's certainly coming up within the next few days to a week. And what we are seeing is President Trump and his team sort of making comments about how that is likely to play out. Okay, and so I suspect after the 4th of July, okay, 4th of July events of this week, I think next week could be a rather volatile week as we get back into some of those sort of tariff shenanigans, okay, that as the sort of 90-day as the 90-day limit comes towards an end. But certainly for the last couple of months, that has been, an uptrend that has gone to new highs. Okay, and we've talked about it here. Not wanting to fight it, basically using it as a way and a means to engage with these markets and work your way higher. And that has also been the same on the NASDAQ. The NASDAQ did pretty much exactly the same. And once again, it's just astounding to see, from when we were down here, okay, sort of end of March, start of April, to here we are, end of sort of June, to see, closing at highs. That is quite some astounding, really. And once again, the daily chart was just grinding its way higher, okay, grinding its way higher. And that is, as I said, when you're getting that kind of trend, don't try and fight it. Find out what is the way that I can join it, whether it be, my own personal way is to enjoy joining trends, okay, on pullbacks when I get the sort of the right price action. Okay, other people might like sort of to sort of buy new breakouts, etc. And that's excuse me. And that's absolutely fine as well. Breakouts work in good trends. Okay, that's what we see. I'm personally like to sort of trade pullbacks. That's my preference. But other people will operate differently, and that's absolutely fine. Okay, that is what makes a market, and that's what we're keen and interested in. So, as I said, we have seen that the Dow has lagged a little bit. Okay, the Dow has lagged a little bit compared to NASDAQ and the S&P, but you can see it is still a strong uptrend. Okay, and in fact, I think that Dow has kind of accelerated last week after the events of last week. We can see that basically, that's where we find ourselves, and it would not surprise me for us in the Dow to basically to push to those highs as well. And so, even just looking at that from sort of July to sort of October, that in itself, the price action there with that sort of double top, the real strong collapse, the sort of the V-shaped bottom with a sort of double bottom there and rally up there, that is it's for an experienced trader investor like me, it's fabulous, it's fantastic, it's fascinating. I'm always curious about the way markets operate, but as I said right at the start, I do recognize if you're just at the start of your trading and investing journey, it might seem to be a little bit overwhelming or a little intimidating. And as I said, hopefully these sessions just give you a little bit of help and a bit of insight in terms of understanding them and also how you can possibly navigate them as well. And we're seeing similar price action across the world. So if we look at ASX, and we talked a little bit about this a couple of weeks ago, ASX had got to the sort of recent high, but had sort of drifted its way down from it. But as we can see, it looks like it's looking to try and make another assault on those highs. This was a little bit of we had a little bit of a move down here, but then we had, this is okay. Let's get that tool. This is a bullish engulfing candle. It's a key reversal candle because price is pushed to a low and then reversed and closed, all right, above the high of the candle. In this, excuse my drawing there, but you get the idea. This is kind of a little bit of a channel, a little bit of a bull flag. Bullish continuation engulfing candles and key reversal candles are very rare. Okay, they do not happen as often as we would like them to occur in markets. Okay, they don't. But once again, remember what I was saying is that when a market is in a good trend like this, you don't want to fight it. You want to find ways. Is there ways that I can actually join this market? And this here for the last few days has been a way for the last week for it to work its way. And I would be intrigued to sort of see it, us basically attack those highs. Okay, attack those highs again. That would be my next view. Okay, in terms of that ASX. And the thing is, if it doesn't, if it can't, that in itself is telling me something. I would be expecting a bit of a rollover. But at the moment, based upon that we are in equity indexes, we are in a bit of a risk-on environment, and the fact that we have had Powell and Federal Reserve now starting to talk about the possibility of interest rate cuts, and President Trump's how shall I put it, his his real enthusiasm, okay, for Mr. Powell to cut interest rates, that by doing so, that would give equity indexes around the world, excuse me, it would give them a little bump, and that might be what takes the ASX and other global indexes a little bit higher. Yeah. Excuse me, it's been a long day of presenting. Okay, so that is what we're seeing on ASX. So I'll be keeping an eye on that over the next few couple of days. In terms of strong moves, we have also had, this is the Japanese Nikkei, the Japanese 225. You might remember I was very curious around here, looking at, I had a few tactical short-term shorts here, thinking that maybe we might drop a little bit lower. But as you can see, we have continued to move, much higher, even though there is still some matter of negotiation and debate between Japan and US on the sort of the tariffs between the pair of them. And despite that, we have seen basically the Nikkei sort of move higher. That surprises me. Okay, I would have expected maybe not the kind of strength of move until actually we'd had some real confirmation on what those numbers and levels will be. But it has not stopped. It has not stopped it going so far. Although actually, if I look in here we go. If I look in the day chart, we kind of rallied up there strong towards the end of the quarter. We've kind of drifted off a little bit there around the 40,000 number. As I said, I think there's conversations between the Japanese and the Americans this week, probably going to have to be tomorrow, and then into next week as well. And as I said, I will be curious to see what the actual numbers and details are there, because that is a huge trading relationship between Japan and the US, and it is in both countries' interest to ensure that it is economic relationship continues to be strong and prospers and stuff. And so I'll be waiting to see what details come out of that over the next week. There's the FTSE, but you know what? I'm actually going to talk about the FTSE when we look at sterling in a moment. That's when we'll do the FTSE, because as I said, there's been an interesting afternoon here in the UK, and it kind of looks better when we pull them all together. But if we look close to home in terms of the German DAX, it's been an interesting couple of weeks for the German DAX. We talked earlier about the S&P and the NASDAQ climbing to new highs. And the DAX had led us there. The DAX was the first one to basically break its previous highs and get into the zone. And I was saying, I needed to see it stay above there for it to be long-term bullish, and I was curious. I was a little bit concerned because some of the price action wasn't exactly super strong bullish, and then we had a really strong fallback. But then last week, another bullish candle back up above the sort of early year highs, with a strong bullish weekly close. Okay, this almost is like, excuse me here, this kind of these three candles here are almost like a morning star. Now, normally, here we go. This was almost perfect example of a morning star. Price had come back to the 50 period moving average, printed a morning star, and as you can see, okay, that was a very nice move there itself. Now, so normally I would expect to see morning stars at the end of a little bit of a pullback, at the end of a little bit of a downtrend, but we've not even had that. So, once again, here my curiosity is for us to stay above that sort of 23,500 area. That, to me, if we can hold above there, and if we stay above there, I would look at that as almost like building a base before we make another move. We've got a rally, we've got a base, and then another rally. Okay, I'd say the price action doesn't overly excite me either way, to either the bearish side or the bullish side. So I'm just looking at price, staying above that level. We have started to see better data coming out of the German economy. That might have a filter through. But then equally, what we also have is, in the same way Japan is negotiating with Trump and his team for their tariffs, there is also discussions coming out about Europe and their tariffs, okay, and what they're looking to achieve. And I think clarity on that in the next sort of 7 to 10 days would have a huge impact on the DAX as well. And that might well be a sort of a variable that is affecting the DAX at the moment. So, as a longer term position trader or investor, I'm wary. Okay, I'm wary to get in there. As I said, I just wanted to stay above that level, and if it can do well, then that might be the base for a next leg if there is a good resolution to the sort of Trump trade tariff talks. Okay, so before we switch across to look at the dollar, we also will have a look at gold, because I recognise that many people love trading the sort of gold. Now, of course, here we are, 2nd of July. So not only are we into a new month, but we're into a new quarter. So I was just curious to look at here. This was last month's candle. Okay, to me, that is, that's a bearish pin mark. It's a rejection candle. Okay, that to me, when I look at that, for those last 3 months, that's all wicks up there, around about that 3,400 level. Okay, and I'm going to be curious to see, well, okay, is that indication that we are running out of the sort of strong bullish energy now? What would need to happen? Okay, what would need to happen to see that? Well, we'd need to see a reversal in the dollar, which, if I'm honest, I don't see happening today. Looking at it, but when we look at the dollar in a moment, maybe that will give us an indication of what's expected. There's also a case of, if we get real progress in terms of peace talks in the Middle East, and so we remove some of that geopolitical tension, that would be bearish for gold. That would be my view. And furthermore, if we get just a little bit of confidence, okay, seeing markets at new highs, that in itself would sort of remove the sort of bull case for gold. Okay, gold has been a real uncertainty trade. Okay, for the last year, you can see that whenever there's been uncertainty in either markets or in geopolitical events, and people have just bought gold. Okay, and I wonder, we will see, is this an indication that kind of energy and momentum may be drawing to a close, or maybe it's just taking a pause over the next couple of summer months before we get into the real action in sort of September, October, November of later this year. We shall see. But I did notice that is, it's a monthly sort of rejection candle, and we say here in the UK, one swallow doesn't make a summer. One rejection candle doesn't automatically end a strong trend, but it's something to add to my watch list. It's something to sort of, take on board. Certainly when I go down to the weekly chart, we'd looked at this kind of weekly bull flag, which we worked our way out of it. But actually we've drifted our way down over the last couple of weeks. And remember, we were saying last week that is almost like a global response to the strikes on Iran. Okay, markets actually liked it. Markets were actually positive about it. If I look to the daily chart, we came up here and we pierced May's highs, and then we did actually a really nice reverse of it, and drifted our way down. Well, the last couple of days, as I think there's been a little bit of uncertainty the last couple of days, where we've seen a little bit of move higher. But as I said, I think those kind of non-farm data tomorrow, all right, conversations or actually getting through any let's call it geopolitical risk tension around about the 4th of July this week. Is if I'd been hit by the Americans, okay, recently, the 4th of July would be a fantastic day, I think, to basically to retaliate. That's just maybe the way my mind thinks. And so, as I said, geopolitical risk tension. If the numbers are okay tomorrow, if the geopolitical risk tension from Friday is fine, well, then I think that actually, as we get clarity on some of those tariff conversations, I think uncertainty starts to wane, and with that uncertainty, so does gold strength. But on the flip side of that, that could also, if there is geopolitical risk tension, if there are poor numbers, if there is continued friction in those trade talks, well then that works well for gold. Okay, so I see that as this is perhaps a pullback in a little bit of a daily downtrend, and I'll be looking to will the uncertainty ease, which would basically give us an opportunity to work lower on gold. Okay, so as I said, part of gold's moves is related to the US dollar. So why don't we have a look at that? Okay, so excuse me. So I have the profile here for the dollar. So here we have Aussie dollar on the weekly, Kiwi dollar on the weekly, Euro dollar on the weekly, dollar CAD on the weekly, pound dollar, dollar yen, dollar Swiss, and the dollar index. Okay, so we're going to look at dollar, but index in particular. But we can see for the most part it's been down, as dollar Swiss franc. Okay, that is dollar weakness, Swiss franc strength. Bang here, that is pound strength, dollar weakness. That is bang. That is euro strength, dollar weakness. That is bang. Aussie strength, dollar weakness. Kiwi strength, dollar weakness. Canadian strength, dollar weakness. Basically, Japanese yen strength, dollar weakness. So, those of you who join us on a regular basis will know, I always go through this because remember, like I say, if there are clear trends in place, don't try and fight them. Okay, try and work with them. All right, and that's that is what we have seen with the dollar. And so maybe, as I said, some of that gold price has held up a bit because what we have seen is such a weak story for the dollar. And I was reading some, I think this has been the worst 6 months for the dollar in many, many, many years. Okay, probably from before even I was born. All right, but I can't remember off the top of my head the exact date. But you can see it with your own two eyes, can't you? You can see it with your own two eyes on that weekly chart. That has not been a good 6 months for the dollar, but it has been a great time for any of us who have been shorting the dollar. Okay, so there's two sides to every story, but when we look here, let's go down a little. Have a little look at the daily. I was interested. We talked about this a little week or so ago. That I was curious to see whether we were flushing out the lows, whether we were going to. Let me zoom a little bit. I was wondering, were we having a sort of flush of the lows? Was this a possibility of a sort of a short squeeze? And interestingly, we as I said last week, we kind of worked into the start of the week for after those American strikes, but then you can see for yourself that basically the market just turned and just continued to collapse. Now, if there are now going to be more interest rate cuts, in the US and happening in a quicker move, that would have an impact on the dollar. But what we can see is that that is still a dollar downtrend, isn't it? So, there's nothing in the price action here that is sort of giving us any indication of a possible reversal or a turnaround there. Okay, so remember what I said, all right? Don't fight a trend, especially don't fight a strong trend in the dollar. Okay, the dollar is the big daddy of the FX market. Okay, so if that is in a strong trend, you don't fight it. As I said, you find ways and means to work it. Okay, and that's what we're looking at, and hence why when we see it across these markets here, that is actually how we look to operate. So, for example, the dollar against the Swiss franc in my own model. Okay, my own stand model where I'm looking for strength, trend, and momentum. The dollar has been at the weak of the stand, and the Swiss franc has been at the strongest. My job in the FX markets as a swing and position trader is to basically buy strength and sell weakness, and really that's what that's been. We pulled back a little bit, provided a nice pin bar, which became an evening star, which has just continued to work its way down there. And we can see that has just continued there. Okay, and there was a real fabulous opportunity there. Okay, invariably we're in a downtrend. Price had done that pullback, and then what we saw, this is a 3-bar reversal. It is a bearish pin bar. It is off the 20-period moving average. It is forming once again. Okay, another lower high before price accelerated away. Okay, and that's what I want to do. All right, these are my trades. Okay, I don't want to be fighting. I don't want to be fighting a trend, even though I love reversals. I'm only trading a reversal when it is literally staring me in the face. Okay, I don't sort of trade reversals just because I'm bored or I want to. When there is a good trend in place, okay, I don't fight it. I want to surf it. Think of yourself as a surfer. Okay, you want to surf it, and that's what I'm trying to always do when there's a good trend. Now, yes, I have years of experience, but what I will tell you is this. I say this every time. Okay, good trends leap off the chart at you. The challenge you have is that really markets only trend 20 to 30% of the time. So when there is a good trend, don't fight it, surf it. Okay, don't fight it, surf it. That's what I always look at. Okay, and that really goes. The thing is, say that really goes for any asset classes, whether it be FX, whether it be equity indexes, whether it be equities themselves, whether it be commodities, okay, whether it be fixed income or other asset classes. That is what we're looking to do. So we have seen that, okay, the dollar against the Swiss franc has been strong. If I look at the euro against the dollar, almost the inverse of the dollar index, once again, that has continued to be strong. Okay, the euro is strong, and this is my personal view. The euro is strong, okay, because the dollar is weak. We have been experiencing an anti-dollar, anti-US, anti-Trump sentiment across markets, okay, and sterling had been benefiting from it, as had the euro, and we can see here, once again, we have just worked away. That has been a daily trend there, okay? Nice little bull flag there as part of it. But, that has just accelerated, okay? That has accelerated, all right? But, there, once again, and I appreciate any trend can change on change on a sixpence in the modern age where President Trump can come out and say something. But the reality is, there is nothing, there's no reversal price action there, okay? There's nothing there telling you to reverse that trade, okay? We are tickling 118. And at the moment, until we get any difference, okay, in terms of the economic data from the US and from Europe, that is that trend. And once again, I would not be looking to fight it. And once again, this was not an easy candle, okay. But as I was saying earlier, this was a bull flag, which was ended with a little bit of a pin bar and then a strong engulfing candle, okay. Bullish engulfing continuation candles are very rare. Okay, they don't happen as often as you would like them to. So when they do occur, in the same way here, this bullish key reversal rejection candle, key reversal, they don't happen very often. So when they do, you sit up and take notice. So I think we can see that the dollar has been on a pretty much a tear there, hasn't it? Okay, a real pretty much a tear. So I think we can get the idea that the dollar still remains weak. Okay, the dollar remains weak. Yes, we do have data out over the next week that could change that. Okay, but for the moment, dollar is still weak, okay, and I still wouldn't be looking to be long dollar at the moment, okay. There's nothing there that is giving me insight that that is the way I should be operating. Okay, so with that in mind, let's start to look a little bit closer to home, okay, and in particular, sterling, and as I said, we'll have a look at the FTSE as well. So um, I'm going to basically, maybe we'll start with the weekly chart. As I said, it has been a rather interesting afternoon in the markets, which I'm keen for us to discuss. But let's just have a quick look at the big picture. Okay, so the quick look at the big picture is, if I look here, this is, as I said, my British pound profile. So I've got GBP USD cable, Euro sterling, pound Aussie, pound Canadian, pound yen, pound Swiss, pound Kiwi, and the FTSE. Let me just get them all onto the right same time frames, okay, just for the quick sort of for a quick snapshot, okay, to begin with. So certainly for the weekly charts, what we had seen is, sterling strong against the Japanese yen, so kind of risk on. Sterling still strong against the US dollar, okay, which is what we're expecting. Kind of going sideways, okay, against the Australian dollar, which is kind of curious. A version of that against the New Zealand dollar, okay, a mixed picture against the Canadian dollar, but part of that mixed picture against the Canadian dollar because of the swings that we have seen in oil prices. Okay, Canadian dollars, it's a commodity dollar currency, it's associated an awful lot with commodities, in particular oil and a little bit gold as well. So when we've seen that kind of volatility in oil over the last few weeks because of those geopolitical tensions, that's what we see it in there. Okay. What we start to see, and if we look at the others, we can see, euro sterling, okay, has been euro strength, which is what I just said. And interestingly, maybe we'll just have a little look here. Pound against Swiss franc, okay. So I had been saying that, we're in very much a risk-on environment when it comes to the equities, okay, looking at those US equity indexes hitting all-time highs. If those of you who've joined us for a few while have been saying that, I've been saying a couple of weeks ago that I was looking here, okay, pound against Swiss franc was for the most part just going sideways. And I was using it as a bit of a risk barometer. If price had rallied higher, that would give sterling strength, Swiss franc weakness, risk on. If price dropped lower, that is sterling weakening, Swiss franc strengthening, that is risk off. And so even though equity indexes, okay, are in a risk on environment, I would say that's not necessarily the case with the FX world, because Swiss franc has been strong. Yen has been strengthening a little bit, but also just indications of, some of the beta risk on currencies like sterling have weakened. And so this leaves me a little bit of a conundrum, all right? That has actually, as we can see, that has basically probably given us an indication that Swiss franc is strengthening, sterling is weakening. Now, when we start to look at the sterling weakening tool, okay, a lot of that has been accelerated by what we saw this afternoon. Hence why I'm just going to put these onto the hourly chart, because I think that will help us. So we had a rather curious event this afternoon. So, for those of you not in the UK, what we have here on normally on Wednesdays is what we have in the UK Parliament is PMQs, Prime Minister's questions. He will go. He will make statements to the House, okay, to the country, and will also answer questions from the opposition and other MPs. It's something that's been going for as long as Parliament has been running. It's one of those dyed in the wool standards and traditions we have here. But what we had, interestingly, at today's PMQs was we had the Chancellor of the Exchequer, Miss Rachel Reeves, was there, but also she started crying during the period, which is it's unprecedented. It's not been seen at all. And furthermore, not only was she crying, but the Prime Minister refused to make confirmations about how much longer she would be in the job as the Chancellor of Exchequer. This was on the back of the government passing their benefits bill last night, but a very much reduced version of what they had hoped. They had hoped to make so many billions worth of savings, but now it might only be about 2 billions worth of savings, which adds to the sort of the impact in terms of the sort of the fiscal control or the lack of it that perhaps markets are seeing in the present government in the UK. So, as I said, it was unprecedented to see the Chancellor Exchequer actually crying at PMQs. Now, maybe it's hay fever. I myself have had terrible hay fever this summer. It's been really quite bad. Maybe there's a personal issue. But actually, it's not a great look. Okay, it's not a great look when you're almost like the second most important political person in the country, and markets reacted to that. And what we saw were the yields on UK government debt gilts on the sort of the 2, the 10, the 30, they soared afterwards. Not only did they soar, but what we saw here was sterling, which had already started selling off, accelerated in that selling, okay, this afternoon. And, really what we saw was really strong, very strong sell-off in sterling. And, this is an indication of how these events these days can impact and affect markets. As I said, maybe Miss Reeves has something going on in her personal life. Maybe she's been told she's losing her job in order that she's been thrown under the bus so Mr. Starmer can continue. Who knows? But it is fascinating to us as traders, investors, to see how an event like that, how it can have such a huge impact on UK markets, okay, UK gilts, FX prices just over this afternoon session. It's unprecedented. We see sometimes political events having an impact on markets. Of course we do. But to see something like that, for the Chancellor to be crying in Prime Minister's questions and to see how that impacts the market is quite unprecedented, quite, unbelievably shocking. Okay. And you can see here for yourself the impact that has had on sterling. Now, as I said, I thought sterling was already starting to come off its highs. Okay, we had seen a lot of sterling strength this year, which the Chancellor Exchequer and Mr. Starmer had taken great pride in achieving, and putting it down to their own decisions. But the reality is that sterling strength had come at a cost of the sort of US dollar weakness. Okay, as I said earlier, that anti-Trump, anti-US dollar trade that we've seen over those last few months, others benefited, and the euro has benefited, sterling has benefited. And I wonder, now we're into a new quarter, and as the tariffs, sort of the conversations are coming to a head again, is this just accelerating a sort of a lack of strength in the underlying sterling? Or is it markets starting to get a little bit worried and a little bit nervous that if Miss Reeves is about to lose her job as the Chancellor of Exchequer, it might be said, some might say, that the pool of talent within the government to be able to step up and fulfill that role is somewhat thin. And invariably markets were worried about actually who would come after. Okay, so perhaps this is a reaction of that. So I think what will happen is we'll see whether tomorrow in sterling, whether this has just been a knee-jerk reaction to an unprecedented event, or whether there is a deeper kind of narrative that is at play that we will get to watch. So I think sterling tomorrow, excuse me, overnight sterling into tomorrow could be an interesting instrument to look at, and you might want to take that. You might want to take that on board. As I said, unprecedented events this afternoon. Okay, so we've had a look at those. Let's just do a couple of minutes at looking at some UK stocks. Okay, so I'm going to switch across from the Admiral Market MT4 across to my Invest.MT5 account here. So, excuse me, that is my hay fever, but that it certainly didn't make me cry when I was on TV, but each their own. Hey, so what I've got here set up as a United Kingdom Just looking at the research terminal here that will provide you access to all sorts of events, okay, both globally, and you can also narrow that in based upon particular sectors or particular currencies or particular equities or particular areas or environments or parts of the kind of globe that you'd like to sort of view that on, which we can see there. Let me just move this out of the way. Yeah, and you can look at the assets that here, and you can set that up to give you a sort of a sentiment tool. There is a news element, okay, that you can work with. Look at the calendar. I think I've got mine set up for kind of just focusing on the UK for the next few days. It's actually quite thin. It's actually quite quiet. All right. So yeah. So the AGM, the Scottish Management Investment Trust, and then we have got their July 4th, okay, Friday is their next dividend payment date for ABF. Okay. Associated British Foods, and you can get the news down there. So for those of you who have an equity focus, those of you who particularly like to trade news events in equities, the tool can be really helpful at giving an insight into what's coming up and actually how to operate it. For those of you who are more technically minded in terms of using technical analysis, there is also a plugin, and you can create watch lists that will give you insight on specific technical setups that you might want to sort of filter in and work. So, for example, it will work out, for example, Apple NASDAQ, it'll show up there's a double bottom there. So that can help you if you are at the start of your journey and perhaps still learning about both fundamental analysis, or in this case, technical analysis. This could be a help and a bonus to you in terms of being able to work that. And then, yeah, there are other plugins that will give you insight in terms of, I think I've got there on FX pairs, looking at giving you specific trade setups if that is what you particularly like to work on. Okay, so we have that, but what I'm also interested in is this is VUKE, VUKE. So this is an ETF. Okay, this is a Vanguard ETF of the UK FTSE 100. And I'm curious that we've just literally having rallied up hard. Okay, to these highs here. We're a little bit. We came off it a little bit. But I'm curious, is this a case of basically just holding the 20-period moving average here? These are rejection candles here on the weekly chart. Now, admittedly, we're only Wednesday night. This one has to complete. But is there the opportunity that that we get a push up to those highs, okay, to give us some decision points on what we're looking for? Certainly, when I go down to the daily, that 50-period moving average, see how it's acting as a dynamic support there. That's what we can sort of see occurring there. That's the events that are occurring there in terms of giving us insight on the FTSE 100. What we might also want to take a look at is VMID. Okay, VMID is a Vanguard ETF of the UK FTSE 250. Okay, the FTSE 100 is often seen as a kind of global index. All right, FTSE 250 is often seen as more representative of the UK. And we looked at this a while back, and I was curious in terms of how we had seen such a strong fall. Okay, we had literally for most of these last 6 months not been in a terribly exciting position, but we had rallied strongly. Okay, and we've come back to these highs here. But we can see this week we have come off there. Okay, we've come off there again. That kind of 33. Okay, that's where we are. Personally, for me, what I'd be looking for is, if we're staying above the 50 and the 200, my view would be that I would want to see price break to these highs, because what we can see here is that, whilst we're up here, it never stays. Okay, there's wicks here, there's wicks here. For me, if we break above it and hold above it, that would be bullish. That would be a strong signal. That would also give me a strong signal for the, as this is a representative of the UK economy, that would give me a strong signal that there is demand, and there is buying power within the overall UK economy. So I'm watching to use this not only as just a buying signal, but also as a sentiment signal for those who are operating in the UK themselves. Who else have we got here that we can look at? So, listen, we can always look at our perennial favourite, Rolls-Royce, which we've talked about, which has been absolutely going gangbusters. And this week has had a little bit of a pullback, but excuse me, that doesn't surprise me. Why does that not surprise me? Because one, the daily chart here, we can see. Remember what I said? This is just a beautiful trend coming back to the averages, bouncing off the averages. Okay, this is a momentum trend of what we talked about. We had pulled away a little bit there. Okay, a little bit of strength there. But remember what we're seeing is running into the end of the month and the end of the quarter. Okay, so invariably there will be some traders and investors who are probably have thought this has been from the lows here in April, where we were here, okay, and what was that? That low was 566 to basically highs there, okay, highs of 982. I mean, that has been just a fantastic run in an already fantastic run. Okay, so you will probably, I'll undoubtedly find there's some traders and investors who've probably just taken a little bit of profit. Okay, if you've been a buyer, okay, there'll be some who've taken some profit because of invariably, having had such a good quarter. So it's no surprise that we've drifted a little bit. Personally, what I'd like to see here, and in terms of an ideal scenario for me, is I'd like us to see us drift back to this 20, which has acted as good levels of dynamic support. And if we get there and get a supportive rejection candle, then that would give me. I'd be looking at that as a possible scenario for a good buy there. That's what I'll be watching. That's why it's always on my watch list again, because it has just done. It's just done so well for us over these last nearly year that we have particularly worked on. Let's finish just very quickly. Kingfisher, okay, which has been in and out of the news again. If you remember what we talked about, Kingfisher, they are they're kind of a retail group. Okay, so they own various retail groups or retail establishments that very often deal with kind of property construction, etc. When we've looked at these guys in the past, we've talked about how really for the last couple of years we have been mostly in a range between sort of 200 pence and 300 pence. Every time we come down to it, we pop up. We were here, sort of came down a little bit lower to it, 230 at the start of this year, but we've rallied our way up to it, and now we've come back down, and we were trying to push back up this week, and I think we'll get data out on Kingfisher soon that might give us a sort of an indication of how that's going. But if I go into the daily chart, the way I look at that is through last month, the 200 period moving average acted as really nice support there. Okay, see how price reacts to it. Okay, price reacts to it. So I'd be interested to see, based upon the kind of what we're seeing here, could we come back to that? And if we do, does that at around about that 272, 275 area, does that provide me with another opportunity to sort of buy from 275 up to 300 pence? That's what I'd be sort of watching there at the moment to see how that particularly takes us. Okay, there you go, ladies and gentlemen. As I always say, time flies when you're having fun. And unfortunately, we've come to the end of our session this evening. I hope you found that useful. I hope that's given you just a little bit of insight into what's going on in the global markets, but also here in the UK with regards to sterling and some UK stocks. As always, I wish you the best of success in your trading and investing endeavours, and I hope that I'll see you next week for the next of Admiral Markets Market Pulse Weekly updates. Until then, trade and invest well, everybody, and I'll speak soon. Cheers.